We have Anil Bhagdani joining us now on the phone line. Anil, good morning. Good to have you here. Just your thoughts on, you're seeing the market, of course. What are your thoughts?
See, as far as the Nifty is concerned, we've been in a downtrend. We've been making 52-week lows practically every week. So that's not so much an issue. That I know the trend is on the downside. I think what's worrying today is normally whenever the index has been weak or flat, the mid-cap has outperformed. Today is the first day you're seeing underperformance, and in a major way for mid-caps. And you're seeing big stocks of last year collapsing. So a Markson Pharma down 20%, a Leica Labs down 13%. Okay, obviously one sector. Then if you move on to the mid-cap IT, whether it's a result of TCS's numbers, but Intellect down 8%, Majesco down 8%. Don't get me wrong, these stocks have had fantastic runs. But suddenly you're seeing stocks of the last 6 months that have done really well coming off. Quality, obviously it went from 60 to 150, which was a huge move, down 9% today. So there are a lot of names that had done fantastically well, but they're coming off. Syntex, it didn't do that great, but down 5% today. I think that is a little worrying for me to see that side of the market starting to take it on the chin, where they had fantastic moves. Yes, due for a correction, but this is not a gradual correction. This is a sharp fall, a sharp cut on an intraday basis. So I don't think you saw Markson go up 20% at a time in a day, but it's coming down 20% in one day is a big move. So I think that side of the market is a little worrying. So if that starts to collapse, then there is nowhere to hide, because already you have PSU banks at 52-week lows, Larsen at 52-week lows, many of the large cap names. TCS, I believe, now broke in a crucial level of 2,300. So a lot of the large cap names were already collapsing and people were hiding in mid caps. But if that side of the market starts to give in, then you got what you call that panic, which eventually will culminate in some sort of bottom. But where's the bottom? Maybe a little too early to discuss. I'm more concerned with what's happening today on the broader side of the screen, on the way the mid-cap stocks are falling, because that creates an overall panic situation. And remember, these stocks have gone up quite a bit. So, falls can be expected, but the way it's coming up is a little more scary. For the mid-cap index itself, I was looking at the 10-month average of 13,025 as a key number. I'm not sure what it is trading at right now, but that was a key support. But if it starts to take that out, then obviously you're looking a little lower. Like I said, that could be a problem side for the market. Yes, I believe it's broken 13,025 today. So the next sort of technical level to watch out for is also, again, 12,869 is the 50 exponential week moving average. So if it starts to take that out also, then maybe the last index that is held out is starting to get into a corrective phase, which could be a little cause of concern for the overall breadth of the market.
I know, I'm sure you've discussed this internally, you've thought about it, you've been maybe asked a question about this as well. Many have kind of said this seems similar to 2008.
I don't believe so.
Is it similar, not exactly obviously, but similar to that kind of a crisis zone? What are your thoughts, Anil?
If you go back and recollect 2008, by the time people realized it was the seriousness of the situation, it was too late. And generally, I am on the side of the camp that believes that if everybody is talking about something, then it can't be that bad. It's generally when you don't expect something and then it comes out of the blue, the effect is drastic. So if everybody is saying this is 2008, then everybody is just selling out and keeping quiet. So then there's no reason to panic, because everybody's out anyway. But I don't see it as that. 2008, if you see the collapse, I mean again, I'm not comparing apples for apples, but if you see the first collapse in January of 2008, itself took the market from 6,300 to 4,400. So that's a 35% correction in 5 days or 15 days. I don't even remember that far back, but in the month of Jan itself of 2008. Today, if you take 9100 top and now 7500 or wherever we are, you do the math, 1600 points on that, which is 15-16% over 10-11 months. In that same situation of the last 4-5 months, you had a mid-cap index which was flying. I don't remember in 2008 that the large cap is collapsing 30% and the mid-cap was not collapsing. In fact, the mid-cap would have collapsed worse in 2008. So I'm not on the camp that comparing the two. I believe that we are in what is called Fibonacci 13-month cycle. So I believe we fell in 2008 from Jan to about Feb the next year, which was about 13 months. I believe we fell in 2010 from November top. We bottomed out somewhere in December of 2011, which is again 13 months. So if I do the same math, I feel we started this correction in first week of March. So if I add 13 months, probably we're looking at March, April as somewhere around the bottom where the market settles down. Now, does the market have to hit the low in March or April? Not necessary. It could probably hit a low in February, go up and then come back in April and May and test that low and then start its rally. I don't know how it's going to play out, but if I had to put a number to it, at least best case guess, see, we've been trading below the 50-week averages now for quite some time, and my generally belief is when you break below the 50 and stay below it for a long time, the ideal test should be the 200-week average. And if you go back in history, right from 2004, the only time that the Indian market really traded below the 200-week average was in that 2008 collapse in October. So assuming that is not the case, which I don't believe it is, the averages today are placed at 7100 if I'm looking at the exponential, and about 68, 69 on the simple. So I'm taking a rough figure of about 7,000 as the worst case scenario, and saying that somewhere in the next quarter or so, the market, because again, I can't believe it's a sharp fall. I believe it's a gradual fall because that's what we've been doing. I mean, we were at 75.39 even in September of last year. Today, 4-5 months later, we are still at 7,500. So net we haven't lost as far as the index, but stocks generally tend to fall more if the downward trend lasts longer. So it's been 10 months, so stocks have made continuous new lows. Having said that, I feel 7,000 would be a great entry. I don't think there's drastic downside below that. But I still feel that 7,000 should not come in a jiffy. It should be a gradual correction which should last totally 13 months, and we are about maybe 11th month right now, or 10 months, give or take how you calculate it. But I think that's what's happening for me. I can't call it a bear market because then you cannot have mid caps at 52-week highs every day. That's not a bear market for me.